design. So that gives you a complete understanding of what your revenue looks like. One, a 3-year average with 25% growth, and then two, trends in your revenue between January and December. Welcome to another amazing episode with us here at Osage Financial. This episode is probably one of my favorite episodes. We do this one every single month. It's a Q&A, answering questions from the audience, sometimes even from our own co-workers that we have here at Osage Financial, and producing them and giving them out to you guys. So in this episode, Q&A, we discussed a few episodes ago, halfway point through the year. We looked at, did you reach your goals? Did you reach your target? Was your budget matching what the actual numbers were? What the actual revenue was in your business? And then, of course, we also discussed key performance indicators in the last episode. And both of those things were the highly requested questions that we had. So today we have 3 questions for you. We hope, again, you enjoy this episode with us today. The first question was, how do I create a budget? We speak about this all the time. We love talking business. We love discussing business. The best way to create a business budget, there's many ways you could create different types of budget. In this specific instance, we're talking about a business budget. And the company that asked us this question is a landscaping company. And we told them, look, the best way to create a budget, and now we're sharing this with you, the best way to create a budget, specifically for a landscaping company, is to look at your 3-year historical and then take a 3-year average and increase that by the percentage of growth that you want in your business. Now, that's a lot of words I just say there. In simple terms, in year 1, 2, and 3, so in 2026, you take a look at 2025, 2024, and 2023, and you take the average revenue for each of those months, for each of those years, right? So we take a 3-year average, 23, 24, and 25, average that number, and then increase that number by 25%. So whatever the average was, increase that number by 25%. That gives you an estimate of what your budgeted revenue for 2026 would be. And then measure that over month 1 through month 12. So whatever the average of the 3 years, increase that by 25%. If your targeted growth rate is 25%, you get your budgeted revenue number for your specific revenue line. For his landscaping company, he has lawn cutting and trimming, he has tree cutting and trimming, and then he has landscape design. So those 3 different revenue lines come with their own 3-year averages. In different seasons, you may have high growth in lawn cutting and trimming. And then in the heavy weather seasons, you may have high growth in the tree cutting and trimming. And then in the planting seasons, in the spring seasons, the customers may want to have new landscape designs. So that revenue in that period will be different from, say, maybe in the winter time where there's not that much demand for landscape design. So that gives you a complete understanding of what your revenue looks like. 1, a 3-year average with 25% growth, and then 2, trends in your revenue between January and December. And he was very excited when I gave him that information. I thought, hey, look, this is a great question to go out and give out to the audience. How do I create a budget? In this specific instance, we just discussed the revenue side of the budget. If you need more information about how to create a specific budget for you, for your business specific, get in touch with us, osagefinancial.com/growth point, or any of the links below, and we'll be in touch with you. The second question that we received was from last week's episode, KPIs, key performance indicators. We discussed key performance indicators from a towing company. And in this towing company, we discussed, look, in your KPIs, the key important things you need to take a look at are how many calls are coming in. Of those calls coming in, what is the conversion rates on those calls? What is your average revenue per call? And then, of course, one of the things that our client really enjoyed was, what is the revenue per mile? Simply put, revenue per mile was, in the month of June, how many miles did you drive and what was the revenue? You take that revenue divided by the miles, you get your revenue per mile number right there. And we use this revenue per mile number to take a look at the efficiency. How efficient is this company being ran per mile? Look, if your revenue per mile is very low and you're traveling long distances, that means 2 things. You either need to be specific about your service area, or if you don't mind traveling those long distances, you need to adjust the pricing that you're charging for your services to make that revenue per mile make sense. And of course, to hit a manageable gross profit number. If you want a 50% gross profit, that means you either have to decrease the miles that you're driving to service your customers, or if you like the miles that you're driving, if you like the distance that you're driving, you need to increase the price that you're charging your customers to be able to hit an efficient gross profit number. Okay, so that was a great one, and we thought, hey, let's go ahead and give it to you guys in this Q&A episode. Now, the next thing is we discussed the budget, we discussed the KPIs. The second half of the year, that's the third question that we have. How do we analyze performance in the second half of the year? So many episodes ago, we discussed a budget. You always have to have a budget going into the year. We discussed you always need a budget going into 2026. We discussed you always need a budget going into 2027. And in our budget episode, we discussed that you probably need to be budgeting already for what 2027 looks like, right? We spoke about taking that 3-year average of revenue, increasing it by 25% to get an almost realistic number of what your revenue projection should be for any of the months that you're operating your business. The second half of the year, you take a look at the performance of your business in the first half of the year and you compare that to what your budget estimates are. The real performance are called your actuals. What did the company actually do in the first 6 months of the year? Compare that to the budget. What was the budgeted target? Two things will come true. Either your numbers were below budget or above budget. If your numbers were below budget, you need to take a deeper look at the performance of your company. That's where KPIs come into play. You need to analyze your business. Did we run as many calls as we budgeted? If you ran as many calls as you budgeted, the next thing to take a look at is, was our revenue per call matching the budget? If your revenue in the first half of the year was below your budget, however, you ran as many calls as you had budgeted, that means either your revenue per call was low, your conversion rate was low, right? Either one of those things could be true. That way, or the fact of that, those two things could be true. Those things could have an impact on your revenue, right? You ran the calls that you budgeted, but your revenue was low. Either your conversion rate was low or the average price you're charging the customer for your services was low. So you missed budget. So as you take a look at the second half, you need to take a look at what impacts did the calls that we ran, did the conversion rate that we ran, did the average price that we're charging the customers have on their revenue, and then make the necessary change in the second half of the year to be able to be close to or meet your budgeted targets for that second half of the year, right? The next thing is still staying on revenue is, if we're having a good conversion rate and our revenue per call is meeting our budget, then of course we will match the revenue. If it's matching that, and you'd like to increase your total revenue, of course, you need to increase the number of service calls that you're running to the customer, right? If you're a towing company, you need to increase your marketing so you can increase the demand and you can deliver more vehicles or pick up and drop off more vehicles as you need. If you're an HVAC or plumbing company, you need to have more service calls coming in from customers calling for your service. Then go ahead and service that customer, deliver the highest quality of service possible. Of course, in every business we do, we have to deliver the highest quality of service. From that quality of service, the customer will be happily willing to pay the price for your services. Therefore, you increase your revenue. So thank you for watching this amazing episode with us. Just a quick recap. Budget. You always have to have a budget. And in that budget, like we discussed with the landscaping company, know where your revenue is coming from. His revenue is coming from lawn cutting and trimming, tree cutting and trimming, landscape design. Take the average of the 3 years that you had and then increase that average by 25%. Then that can kind of give you an estimate of the revenue projection that you need to have for each of the months of the year. KPIs, key performance indicators. You need to know what the key performance indicators in your business are. Understand those key performance indicators will then drop down to understanding what impact are the calls that you're running, the services that you're doing for your customers having on the business. What is your average revenue per ticket? And in the case of this towing company, what is your revenue per mile? Does that revenue per mile make sense business-wise? Does your revenue match your gross profit targets? We all know below gross profits are all the expenses that come in your business and, of course, your net income. And then the third one, looking at the second half of the year. Looking at the second half of the year simply takes two things. Looking at your budget, what's your target? Looking at the first half of the year, did we hit or miss our target? If we missed our target, looking deeper into the KPIs, did we perform like we projected to perform? If we did not perform like we projected to perform, what changes do we need to make to be able to match or beat the performance target that we set for ourselves? Remember, a budget are simply goals that you set for yourself. it's a measure of, this is the goal that I set for myself. Am I meeting that goal in the business? If you're not meeting that goal, what went wrong or what went right? If something went wrong, let's correct it and meet the goal or beat the goal. If something went right, let's improve upon it. Let's make it a performance procedure in how we do the business operations. Thank you for watching this amazing episode with us here at Osage Financial. If you're a student, we hope you find this episode valuable to you. If you're a company looking for accountants, click the link below and we will be in touch with you as soon as possible. Have a good day.